Hi traders, in this video we're going to be discussing the second largest company in the S&P 500 by market size. We've got earnings coming out, but even if you're watching this video after earnings, there's so many things that we're going to talk about in this video and unpack that are worthwhile learning for future news events. And more importantly, watching what Apple does over the next coming months will be so important to market sentiment. So let's get started right after this intro. I think the question is going to be, is Apple's earnings going to be moldy or is it going to be a shining beacon of hope? Either way, the Fed will sort it. So I'd just like to remind everybody before we get into the video, please like, comment down below, which so many people have been doing, and make sure you subscribe and hit that bell button. I'd just like to say thank you for everybody for growing this channel so quickly. We've been meaning to do this for a long time. We've got a lot of experience in trading the markets, and I really appreciate that we've already hit over 1,000 subscribers. So thank you so much, and here's to 10,000. We hope to get there very soon. All right, so here's the Apple chart, and there's so many things we can break down and learn about this Apple chart. But the first one I want to mention is actually something that we saw in terms of a pattern that has kind of played out, and that has been the inverse head and shoulders pattern. And we've got that neckline here, and very easy to see kind of pattern on this stock. This is the Apple futures contract, by the way, so there's why there's a lot of gaps, but there's also a little bit of trading going on as I'm shooting this video. And this particular pattern, usually you would expect it to go around the distance of the head to the neckline. So if we actually take that distance right now, bring it up on the chart, we can say, okay, well, has it gone that level? So when it comes to trading an inverse head and shoulders or any pattern, it's about looking at the self-fulfilling prophecy. So when that neckline's broken, it should generally go the distance of the head to the neckline, and that would push it ideally into another level of key resistance or support. And that's what this projection was saying. It was basically saying, okay, we've got support here, resistance here, and then that will act as resistance again. But with so many patterns during periods of high volatility, what they tend to do is they only go around 70 to 80% of what you expect. And this happens because the market knows these are self-fulfilling prophecies. They see this particular pattern and they push it enough to make a nice amount of money, but often not just quite far enough. And that's why when there's periods of high volatility, when the VIX is over 20 to 25, you want to be thinking about taking your profit slightly faster than you usually would, because it's not a full technical market, it's a fundamental market as well. And when things happen, they happen incredibly quickly, and there's a lot of kind of thievery each way where the buyers and the sellers, and more importantly, the large big manipulators in the market are seeing these patterns and taking the profit off the table because they're also partially scared. So we know that this market is acting technically, and the reason we know that is, firstly, it came back down to the neckline and then it bounced off that point and moved up. Okay, that's the first point that we want to say, okay, well, we know that it's currently acting relatively technically. Then we've set this resistance here, and then we've got another resistance point that's just been reached at right here. And what I automatically go and do whenever I see kind of two resistance points is I always bring my MACD indicator on. And I particularly like this MACD. I do know that some people don't like this one, but when spotting divergence, it's quite easy with the histograms. So this is what we call Class B divergence, okay? And we've got Class B divergence on Apple at the point of resistance ahead of earnings. So there's a couple of things to unpack here. Number one, Class B divergence is really great, but at the same time, I wouldn't just trade off Class B divergence. I'd want to see a little bit more. I'd want to see further candle confirmation. So maybe on the smaller time frames, a sell-off, followed by a pull-up, followed by a new lower low, and that would show me the change of trend on the smaller time frames, let's say 1 hour in this case. But when we're at this resistance, the key is the news. So Apple's about to announce its earnings report. And look, this earnings report isn't going to be as bad as probably next earnings report. There's lots of bullish cases we'll look at and lots of bearish cases for Apple's report. It's a tech company. It could be doing well in their services and all sorts of, pros and cons to what's happening. But the important thing is for a trader that's going to be trading for a long period of time is notice that the market will go to critical points before the news comes out. So here it's gone to a resistance point just before the news. Now, if the news is bad, the market comes off. If the news is good, of course, the market will move up, break the zone, and go and gravitate towards the next zone, which will be around that $300 price. In the bear case scenario, if the news is bad and the market starts to move down, what this will end up causing is a double top, okay? And if we get a double top, effectively what that is showing us is that the sentiment is really bad. And we're about to find out why that means so much. And it's because it's Apple, the second largest company in the S&P 500. So this is going to change sentiment in the market. And that's why I'm doing this video today. The change of sentiment is going to be so key to the market. So the double top, let's say, happens. If that does happen, expect the S&P to be doing a similar kind of concept, definitely losing tons of sentiment. And that's why it can be a precursor by looking at some of these key stocks, specifically the 4 largest ones. Let's bring up the market capitalization size of Apple right now. So here we have the market capitalization size of the companies in the S&P 500. Here is Apple. Sometimes it's number 1, sometimes it's number 2. Right now it's number 2 at just under 5% of the entire S&P 500. I did a video on the S&P 500 and how 20% plus of the entire index is made up of just 5 companies. And that is really kind of scary because we haven't always seen that. But when we have seen that, often crashes have happened after that event has occurred. So very high saturation in these large companies. 4.9% of the entire S&P 500 is Apple. And if Apple does a double top, guess what? The whole index is coming with it because to a degree that will ruin sentiment because these companies all need to perform during this earnings period and they need to have good guidance, more importantly. So here we have a website. You can get these economic calendars in the US from anywhere. This is just stocktwits.com. You can check it out after this video. But basically, it shows you all of the daily earnings calendar companies. It gives you a little graph, which is kind of nice as well. And the reporting period, after bell or before bell. Very important if you're trading futures and you're trading CFDs. You need to know when earnings are coming out for companies. So we can see Apple's got an after bell earnings call today. Again, if you're watching this video at any point in time, this is still very key, but that's what we're looking at in terms of Apple for today. Let's now discuss the last topic, and that is that we saw the Fed talking about the US economy yesterday. You can see in this Reuters report, the economy faces a hard slog back from pandemic. And that's just, we can all see this. We all know this. We all know the US is in for a tough time, but we need to just break down this current FOMO hysteria in the S&P 500, and I really think it's starting to get out of control, similar to what we saw in 1929. I know that's a crazy parallel, but the market is super bullish. There's a super amount of FOMOing happening, and while it can still go higher, don't get me wrong, I still think it is, and I still think price action will be key. We need to listen to what these people are saying in the back. They've done these massive prints because they know the flow-on effects are going to be fierce. It's not about what's happening now, it's about what's happening in the future, and the market may not be pricing in some of that. The key highlight out of this article is the US economy could feel the weight of consumer fear and social distancing for years, or even a more prolonged climb from a deepening hole. So it could get worse before it gets better. Even with the massive amount of stimulus, I think we're all in agreement that there is definitely something wrong with the S&P 500 where it is right now. And if you're in the buy time, you can continue following the trend. But when the trend changes and the price action shows you the other way, you will need to pay attention. So tonight's earnings for Apple, very important. This channel will have some great videos on it over the next couple of days. I'm going to do some extra work on the weekend on some really great topics that I want to cover, including a cash topic and some other stuff. So make sure you check those videos out. And again, thank you very much for subscribing.